The world's top 10 oil-consuming countries use more than 50 million barrels of oil daily, and projections are that, by 2035, world energy consumption will grow by 49%, with most energy supplied by oil and gas. The modern oil industry began as a result of scarcity of whales. Until 1859, most people obtained light by burning animal fats in the form of beeswax candles or whale oil. Whale oil shed the purest light of all available fuels and became a luxury product. Overfishing of whales led to a decline in the whale population and the sharp increase in whale oil prices. People have used oil obtained from the ground since at least 4000 BC. In the Middle East, crude oil that seeped to the surface was used to waterproof boats and as an adhesive in the construction of buildings and roads. Like any business, the oil industry runs on the basic premise of supply and demand. The more supply, the lower the price. The higher the demand, the higher price. When asked about his opinion on investing in oil, billionaire investor Warren Buffett said,
"Obviously, you're dealing with a finite resource. You've sucked a lot of straws into the earth, and it is a finite number. So the one thing I can promise you almost promise you, is that oil will sell for a lot more someday." How many producing oil wells do you think there are in the United States? Well, the answer is something like 500,000. One thing I'm quite convinced of, as we talked about this morning, is the fact that the dollar will become less valuable over time, so that the dollar price of most things will go up, and maybe go up very substantially. I really think that an intelligent person can make more money over time thinking about productive assets, rather than speculating in commodities or when, for that matter, fixed dollar investments. But that's maybe my own bias.
Well, if we'd done nothing but oil from the very beginning, I am confident that we would not have done nearly as well as we have. To me, that's perfectly obvious.
We like easy.
Yeah, we're not trying to make it any more difficult than we have to.
the oil and gas sector is an attractive sector for both day traders and long-term investors. The sector is an active and liquid market that can also serve as a portfolio diversifier, and your investment in oil industry may achieve high rates of return, especially during periods of low interest rates. Oil and gas industry is indirectly proportional to the entire economy. The economy might crash when prices of oil and gas go up as the cost of living and inflation rises. In that case, if economic downtimes crash your investment portfolio, your investment in this industry will serve as a hedge and mitigate your losses. Unlike certain industries that are seasonal or inconsistent with demand, this industry is almost always in high demand, and the only thing that can reduce its potential gains or value is when there is an increase in supply to meet those demands, thus bringing the price down. Companies in the oil and gas sector often pay dividends. These dividends allow investments in those companies to make regular income. The dividends are attractive to many investors. However, there is a significant risk that the dividend can be cut if the company is unable to earn enough revenue to fund the payments to investors.